What's up? How's everybody doing? Good morning. Happy Friday. Let me know if you guys are able to hear me, see me in the chat. I'd appreciate it. Good morning. It's been a sideways week. How's everyone's week going? You guys surviving this chop? Thanks, appreciate it. Audio, video, good? Awesome. Thanks, guys. Thank you, thank you. Trying to survive, aren't we all? Hey guys, you just got to know the conditions. There's different setups for different conditions, and you just got to learn how to work with it, right? There's setups for uptrending conditions, there's setups for downtrending conditions, and there's setups for sideways conditions. And we just got to know what's going on and how to adapt ourselves. If you try to consistently just do the same thing in different conditions, likely it's going to be a bad time. Right? So we got to identify the conditions, identify, the range, identify, the trend, whether we're uptrending, downtrending, or sideways, learn how to adapt to those conditions, learn which setups have good expectancy in those different conditions. It's a huge, huge thing, right? Lots of people can trade profitably with lots of different trading systems, trading setups. However, what probably they all have in common, if you're going to be consistently successful, is being able to filter out the conditions, context, confirmations that are low probability, low expectancy, and getting rid of that, right? So that is a theme for me this week and really this whole month. Right? So we'll get into the analysis for the day. We'll get into the setups that I'm watching out for here on ES and NQ. These are the things that I primarily trade. Just ES and NQ, futures and options on SPY and QQQ. So we'll get into the analysis here. But first, just a minute to say thanks to our sponsors. We are going to have some giveaways today as well. TradeZella, let's see, let me check. Apex, Alpha Capital, and 3-month TradeZella. So check out the discount links for these sponsors if you guys are interested in these. And Apex, 90% off right now, by the way. So if you do check out prop firms, Apex is, I think, one of the top that's paid people out the most, and they're running 90% off right now. So there's no better time to take advantage of that if you're using that leverage. AB, happy birthday, brother. Thanks, guys. Appreciate that. A lot of people have reached out to me already. Yes, today is my birthday. Yes, I'm here with you because this is my favorite thing to do, is to be here with you guys. So this is a birthday stream for me. Let me fix my camera here. Sorry, it's a little off center. But I will be enjoying the weekend, stepping away from the screens for a little bit. But today I'm excited to get into it with you guys, go through the analysis and everything like that. So let me share my screen here. This is Bookmap. This is my preferred order flow analysis tool. There's lots of good tools out there. I like this for just live tape reading as the orders come into the market. So, what a second. What the heck just happened? Sorry, guys. I'm also using Tradeovate here, looking at my volume profiles on here, and they just reset. So hang on a second. All right, so we'll get into the analysis. It's pretty simple, pretty straightforward. But first, let me check out the comments here. Appreciate that from the Chart Fanatics team. Appreciate that, AB. Appreciate you joining in here, man. Let's see. Good morning, MCAM, Gmail. Good morning, Jali P5G from London. Welcome in. A lot of London traders always tuning in. Let me know in the chat where you guys are tuning in from. I'm here in good old Florida. Nice warm weather. I'm going to a resort with the family for this February weekend. It's going to be 85 and sunny, 85 Fahrenheit. South Africa. Nice. My wife's family's from South Africa. Well, they spent time there anyway. New York, Transylvania, Romania, Zimbabwe, Switzerland. Dang, whole world's tuning in. From France, welcome. Welcome, welcome. Switzerland, Sweden, Dubai. Nice. Nepal. I want to go to Dubai sometime. Looks really nice there. Jakarta, Cyprus, France. Wow. Whole world's tuning in. That's awesome. Singapore, Italia. New Hampshire. I feel like we got more people from around the world here than we do from the United States here. That's awesome. Awesome. What time, like what time is it where you guys are at, right? I'm more curious of that. I'm seeing all over the world. I have no idea what the time zones are, to be honest with you. I'm in my own tiny little world of New York time zone. I imagine people are trading at all different wild times. For me, it's like first thing in the morning, getting up, getting ready, going through the charts. London, 2 p.m. That's not bad. I feel like that would actually be nice. You get a little bit more time to prepare for the day, and then you can trade the New York Open in the afternoon in London. Dubai, 6 p.m. $16:07, Zimbabwe, 17. All right, so relatively reasonable times. Relatively reasonable times. All right, so let's get into the analysis. Kind of zoom out here on the order flow and book map. I changed up my settings a little bit on NQ to try to view it a little bit differently. I'm getting more active with trading NQ. I'm primarily an S&P trader, primarily ES, primarily S&P, but I've been getting a little bit more active for scalping on NQ. I feel like I've been able to capitalize a lot more on high risk versus reward intraday scalps with NQ versus ES. ES has been so grindy. It's been challenging for intraday scalps, right? So looking at this a little bit more, you can see I changed my settings here a little bit to view it a little bit differently. We'll get into the analysis on both. It's been kind of relatively the same story on both overall, which has been, we've been range bound, but context is important. So let's go through the context here, things that I'm watching for. Expand some charts here and bring it over. All right, so first things first, take a look here, the daily chart on ES. So you can see over the last couple months, we've been pretty sideways. These are kind of the highs and lows that I'm looking at for. Highs around 7,000s, lows around 6,800. These kind of key levels down here, just from a macro visual, right? Since going back to like freaking November, we've basically just been up and down in this range, right? So not a significant edge as far as trending direction, which for the past like year or two before that, we've had a pretty strong uptrend. I think the last time we went this sideways for this long was actually like February, March timeframe of last year, which was interesting as far as seasonality and as far, end of 2024 going into the beginning of 2025. We had similar conditions. And I think there was some similar stuff as far as expirations and stuff. I'd have to go back. I don't recall off the top of my head if this is typical always seasonality this year, but the last two, you can see just looking at all the way back at my weekly chart here. The last two times, this is literally a weekly chart. The last two times we were this sideways for this long was at the end of the year going into February, So it could be seasonality, could be a few things. There's a lot of kind of macros that are kind of keeping the markets a little bit sideways right now. But at any rate, forgetting the fundamentals, purely just looking at the technicals. Let me go back to my screenshot of this daily chart. So purely looking at the technicals here, area, around 6,800, 6,785 is a key level that I've been watching, and those prior lows there. For the most part, we've traded inside that range with the exception of a couple failed pops here and there, right? A couple failed pops here and there, but for the most part, we're totally within that range. So The markets are this sideways higher time frame. Even within that, we often see a lot of whipsaw action intraday. There's not a strong trend on the higher time frame. There's not really much strong trend on daily time frames or intraday time frames either. Now, especially, you can see we're kind of below the 50% of this range, coming towards the low of this range that we've been in. And you can see over the last like 5 days, we've been especially balanced in this range here. I'll dive more into that for the specific setups that I'm watching out for today, right? But just know we're kind of at the lower end of this higher time frame balance range that we've been in. And over the last 5 days, we've been consolidating here, right? The market's a little uncertain, I think, right now with the macro fundamental stuff going on with the US and Iran, going on with different sectors are getting hit hard by fears and uncertainty around AI. So there's a lot of mixed stuff going on here, both from a technical standpoint and fundamentals. So let's take a look here at NQ as well. Right, so very similar stuff. Kind of watching this area around 24.5, 24.600 as the lows of this higher time frame. You can see we hit that 1, 2, 3, 4 times, and the highs, you know, kind of up here above 26,000. We've hit that 1, 2, kind of 3, 4, 5, 6, 7, 8 a bunch of times, right? We've rejected those highs a bunch of times. That's also near all-time highs on ES and NQ, right? So very flat range here. And again, NQ has been a bit relatively weaker because of the weakness in tech. NQ is more heavily weighted on the tech side. Specifically, software has been hit pretty hard in the last few months. Big software names. You can look at the ETF like IGV. So there's been, you know, they're both kind of in the same higher time frame range, but I would say we've seen relative weakness kind of holding on NQ, primarily because of the extreme weakness in the software sector and tech sector, relatively, right, so far this year. So similarly to ES, we're kind of consolidating in this range down here for the last 5 or so days, right? So it's important to gauge here. We've made, like I just marked here, we've made some lower highs, and we've attempted to pop off the lows of this balance range a number of times, and we kind of continue to show weakness, making lower highs, lower highs, lower highs. So just purely looking at that price action and stepping back and thinking about that, yes, buyers are doing kind of the minimum that they need to do, supporting these higher time frame lows. However, when I see, you know, pops continue to make like lower highs like this, especially off an area, to me, that's just a possible indication of exhaustion from buyers, right? Where, you know, buyers are defending these lows, but lacking continuation more and more, right? So potentially we're seeing some early signs of exhaustion. Now, I don't want to fancy dance it and try to, you know, be too preemptive to catch like a major higher time frame breakdown. However, because I'm a short-term intraday trader, but this is important context as we continue to see this develop, right? Obviously, if we break the structure that's been going on and we recapture back to the upside, then that will be important and likely will go back towards the upper end of this higher time frame balance range. However, it is kind of compressing right now in this range here, right? And so we're potentially preparing for a bigger move, you know, to the downside, possibly towards these lows, right? At least, or, you know, if not, and sellers eventually fail at defending these lower highs, and we could break out and go back towards the upside, right? But that's just pure higher time frame, daily, kind of sitting back and looking at the context of where we're at overall and what's going on. Now I'll take a little bit more narrow look. I want to show you guys something that I'm watching here. I'm dropping these screenshots in case you would like to review. in the Chart Fanatics Discord. If you're not already in there, I recommend joining in there, but I have a channel under Matt Owen there. So for these screenshots and stuff that I share of analysis and different things that I'm going through throughout the stream, I will drop those screenshots in there. Also, if you guys missed it, there's a huge announcement for Chart Academy. Make sure you check out the link for that to join the waitlist for that. There's never been anything else like that, right? There's never been anything else where you can go and get, you know, free training from verified professional traders. So that's going to be a huge industry disruptor there. So make sure you join the waitlist for that. Check that out. It's going to be another amazing free resource. All right. So let me take a look here at the volume profile on this 4-hour chart to give us kind of a clearer picture of where we're at. All right, so once again, starting with ES here, we got about 13 minutes till the open. So you can see how viciously buyers have continued to defend these lows. However, each time we do, we've kind of lacked continuation, right? So this is what I'm talking about. But what I want to point your attention here is I drew this volume profile basically on this range that we've been in over the last 5+ trading days, going back to February 12th, right? When we had this large drop. But since then, you can see this bell curve of volume distribution that's occurred, right? And so typically when conditions are trending, right, maybe we're trending higher, I will look for kind of like wavier volume patterns like that on volume profiles, right? Especially where it leaves like low volume nodes and things like that. And on the contrary, in very balanced conditions, either on a day or multi-day, I will look for like a bell curve volume distribution, right? Where we're essentially mean reverting, okay? So I'll look at that up on the daily time frame, or occasionally when we have something like this going on where it's really like a multi-day range that we've been in for this, I will look at this and draw this on like a simple 4-hour chart and look at this range that we've been in, right? And this helps me just visualize what's going on here and not get too caught up feeling emotional about trades, or maybe trades that I maybe missed just inside that range, right? There's very little edge there, at least for me in the setups that I trade inside the middle. So we can see on a multi-day basis here, the best edge has been the extremes, right? Sorry, my phone's buzzing. You know, until we get a solid break of the structure, the best edge has been fading the extremes and just targeting reversions towards the middle of this range. Even these pops could have provided nicer opportunities to scalp back towards the middle, right? But entries and executions kind of here in the heart of this balance range has not been very great quality. Tendra, I don't know. I feel like I've heard a million times. They said, heard at 10 today, the Supreme Court will have a ruling on the Trump's tariffs. I don't know, because that's allegedly like every day, you know, I'll see it when it comes out. I feel like I've seen that a million times and there's not really been anything to come from it yet. We do have PMI at 9:45. Let me check my news. Yeah, we do have PMI at 9:45, so we got to watch out for that. So again, a reminder, in the Chart Fanatics Discord under the Matt Owen channel, I already typed up my whole game plan. Let me bring that down here. So I already typed up my game plan here and kind of the scenarios that I'm watching out for, the analysis that I kind of just talked with you guys through here, and some screenshots of the setups that I'm watching out for. But just to rehash that really quick, the main thing that I'm looking for is first just mean reversions for scalps. However, like I said, the context of us building this volume at the lows of the higher time frame balance range, this could become very violent if we break down the lows of this balance range into the lows of the higher time frame range that we've been in or I should say out of the higher time frame balance range that we've been in, that could become a violent breakdown on a higher time frame. But again, I don't want to preempt that until that does happen. So far, we continue to just be mean reverting in this range. So if and when it happens, I'll be patiently waiting for it. But until then, I'm kind of looking at these extremes around 6,900 and kind of at least under like 6850s to 40s. This area specifically around 60 to 70 has been an area of interest for me as well. Let me draw this a little better. This area specifically around 60 to 70 on ES has been an area of interest for me from order flow activity. You can see we did wick under it a few times and recaptured. Now we've kind of broken under it here. But again, hard to get a little too excited about that break when you can see just on the volume distribution here how we are just well inside this range still so far, right? So continuing to watch for kind of failures to mean revert until proven otherwise, right? So potentially looking for these scenarios first today, and then if we do get a strong break, then I could be looking for potentially kind of a breakdown, targeting a break under like 6800s. So we got to watch out for that. Drop that screenshot in there. Flip over to NQ here. Again, if the downside pressure steps in hard, NQ could get an even bigger drop. Although IGV, which has been kind of the thing, the sector giving NQ such a hard time and feeding it its relative weakness, has been holding up. It's not really been breaking highs for a reversal, but it's been kind of holding a low here around 80. I'll show you guys that in a second, right? But oh, where did my volume profile go? Hang on a sec. Go. All right, so you can see the downside moves have been pretty expansive and aggressive, right? We've had kind of like a grind higher, and the drops down have been pretty aggressive and violent. So that is important to note. But again, here's kind of this balance range that we've been in, kind of coming down towards the extremes. I'd also probably watch this area as well. So again, kind of watching and waiting to see if we see continued failures there and there, to kind of continue to watch out for mean reversions. Again, until proven otherwise. If we do break from there, right, then we could be going for a more substantial breakdown. But it's important to kind of analyze the order flow and gauge the auction if and when we drop to these extremes. Drop that in there. All right, so we got about 5 minutes till the open here. Check out the chat if I missed anything. DC Paswan P, hello, welcome in. Yeah, news at 9:45. Yeah, we got the PMI news coming out at 9:45. So obviously that can have a significant impact and change things. So we will be staying patient and watching that. I generally like to let the first few minutes develop. There can be such a surge in orders and everything that it's not always advisable to get involved in the first few minutes. So probably likely letting things develop here as usual in the first few minutes. If I see a good opportunity for kind of a quick scalp to be in and out between like 935 and 940. You know, maybe I will. Not saying I won't, but otherwise we'll probably wait till after the 945 news. Golden trades the half bubbles. Are you talking about on NQ? This is just showing the total like volume in the bubbles, and you can see the split between aggressive sellers and aggressive buyers, market buyers and market sellers in that range, right? So like for example, you can see on the heat map here all of this orange. So what is that? That is a lot of passive buyers here around 24,700, and you can see there was a substantial amount of aggressive selling as we dropped into here. So you can see as we dropped into these passive buyers, you can see how the majority of the orders hitting aggressively down here were selling orders, right? And they got filled by these passive buyers down here on the heat map. And then look on subsequent drops, you can just see in the size of the bubbles as well, there was less selling. And then as we started to pull up, look at how the pie split. There's starting to be more aggressive buying into the highs. And then as price moved higher, you can see in the split of the delta between buyers and sellers that now all of these aggressive sellers got absorbed by these passive buyers, and then price started to reverse, and you can see how it split differently. There's more aggressive buyers coming into the highs now, because at this time, at these lows, these aggressive sellers got absorbed. There was no more. And now when aggressive buyers come in, they have kind of an easy time reversing the market back higher. And you can see all of these sellers, right? You can see just clearly there's a more delta from aggressive sellers on this drop, but as price retraces after these sellers got absorbed at the lows, now all of those sellers likely have to stop out of those positions. They're gonna have to buy back to cover, which just adds fuel for a reversal after, you know, we see a substantial amount of absorption like this. Does that help you understand that? Who asked that? Golden trades. Yeah, so on ES here, the bubbles are just showing me like the volume there, just visualized by the size of the bubble, and then red if the overall delta is red in that bubble, or green if it's overall green, right? This is how I normally have always watched it. I'm mostly just interested in which side is larger at that price range, right? And then I'm looking at the volume size. So similarly here, you can see how we had this aggressive selling into these lows around 68.50 on ES. We see the passive buyer here on the heat map absorb them. We tried to break another low, and you can see just visualized by the delta bubbles how the selling was less, right, on this second drop. And then as we recaptured, more aggressive buying came in, right? So that added, you know, fuel, at least not necessarily long-term reversal. I'm just saying in the immediate time frame, right, the next few minutes, we can see how the tape reversed, right? But sellers are continuing to defend because on this pop, you see on the heat map, all these passive sellers defending up here, right? So that's the constant tug of war that the market is in, right? And we can see kind of a significant sporadic amount of aggressive buying and selling and passive orders, liquidity on the heat map and stuff pop up around 9:30 in 1 minute, just as all those opening market orders all hit. Can be kind of a surge of activity, not necessarily high probability to necessarily enter a trade at that time one way or the other. All right, so a bunch of market buy orders right out of the gate there. Just kind of got stuffed. What I absolutely have been focused on lately, I haven't even taken a trade the last 2 days. What I've absolutely been focused on lately is just avoiding whipsaw conditions. So if it's just whipping, especially in the first hour, I'm just going to save my mental and physical capital for another time, right? There are times I take 5 to 10 trades in a day. There are times I take 0 trades in a day like yesterday, right? It just depends on the conditions and the opportunity, right? If it's super whippy and I'm just tempted to just take a trade because I want to make money, not because there's significant edge or confirmations there in terms of context, location, order flow confirmations, everything, then I'm just not going to be involved, right? So again, kind of going back to what I talked about earlier, is a major differentiator between traders that can consistently make money and those that can't is being able to filter out context, conditions, locations that are not ideal to trade in, that you would have a low expectancy trading in for whatever setups that you use, whatever confirmations that you use, etc., and just avoiding that altogether. Don't, suck less. Golden Trades asks, which do I prefer? Are you still talking about Bookmap? I have more experience just looking at the overall delta bubbles like this. A lot of aggressive buying still coming in. We have just, every time we've dropped to this area around, 50 to 70 on ES here, we have just seen a significant amount of aggressive market buying for the last 3 days. Every time, it's kind of surprised me because we've made lower highs off of it and we keep dropping back into it. So sellers just keep drilling back into this level. And it's kind of surprised me how resilient buyers have continued to stay off this area around 50s to 60s with just aggressive market buying. Despite we've kind of had a barrage of negative news the last few days, right? As far as market economic news has not been super positive, kind of leaning heavy on ES and NQ, as well as kind of all the fear, uncertainty, and doubt around geopolitical stuff with Iran and the United States. So it surprised me, I'll be honest, it has surprised me a little bit how aggressive buyers have continued to be at these lows, despite kind of economic fundamentals leaning against buyers, despite kind of lower highs being made off the buying. These aggressive buyers keep hammering these lows. There it is again, just hammering these lows with buy orders. It's a little unfortunate, I guess, that we came into these lows like right at the 9:30 open. Again, just going back to that bell curve that I talked about, I like to, when we're in that kind of condition, I like to look for key areas at the lows to fade for mean reverting scalps. And this was that down here at kind of these multi-day lows around 68.50s. But it's a little unfortunate that we kind of opened up right at 9:30, right at these, and just kind of shot straight out of there right off of it. I don't personally, my data has told me over the years that entering trades in the first 5 minutes generally has a negative expectancy for me. So sometimes when we open up like right at a key level like this and there's just a barrage of orders hitting and I want to trade it, but I just don't. Wow, look at that buying. Again, these buyers at these kind of multi-day lows continue to surprise me. Normally you would see, at a bottom like this, you would see significant passive buyers, right? So you'd see like large red bubbles getting absorbed by passive buyers. But the last few days, these lows have been getting hammered by aggressive buying, like immediately down here. Not so much like large passive buying, although that's going on. You can see these red bubbles here filled on the heat map, but look at how it just got slammed by aggressive buying. It's very interesting. Good morning, Chris. Good morning, Brandon. Welcome in, guys. We will be doing giveaways later in the stream as well. I think I mentioned this already, but we have Apex. Let me just verify. Apex, Alpha Capital, and a 3-month TradeZella account to give away, which is amazing. Wow, look at that. So reminder, we have this data coming out at 9:45. This is this green box on my book map here. This is a key area from the last couple days where I've seen some interesting order flow activity around. Right here around 78s to 73s. So this has been on my chart for the last couple days, and you can see once we broke under that this morning, how these pops into here have failed multiple times. So that's something I'm watching out for. Don't understand all the buy power. What do you mean, Andy? What do you not understand? Kype Attila asked, hi Matt, do passive orders generally dictate the direction? No. However, it's market orders move the market, right? So the passive orders are the liquidity that you see on the heat map, right? Passive orders do not move the direction of the market per se, right? Market orders, aggressive buyers and sellers are what move price up and down. However, passive buyers and sellers can resist and absorb price from moving the other way. So you'll notice some days the market just seems like it has a really easy time going up, but there can be a ton of selling coming in, but it just doesn't go back down. But anytime any buying comes in, it has just an easy time going the other direction, right? And that's because there's when that's occurring, the order book is much thicker to the one side, right? So if there is a significant amount of passive buyers, and anytime the market pulls back, there's just loads of passive buyers on the pullback, then any amount of selling that comes in just gets absorbed and runs out of gas. And then it only takes a smaller amount of delta buying and it just shoots back up the other direction. So no, limit orders, passive orders do not directly like dictate price movement. It's the aggressive buyers and sellers that move it. However, you have to understand the relationship and understand essentially absorption and distribution at passive selling and buying at the highs can resist price movement the other way, right? And absorb them. Does Does that make sense? Does that answer your question, Kaipatilla 2036? We're kind of in a don't touch it area for me, guys, and we're coming into that 9:45 news. So let's talk about this really quick because it's a good one to talk about. If you've been around, you've seen me give this example before, and I've talked about this before, especially for those of people that are I talk to, right? But this is kind of a visual to kind of give you an example, right? So, and I'm going to explain it in terms of absorption, right? So imagine there is like a faucet and a sponge being held under the faucet, right? So imagine this is a sponge. And the faucet drips market orders. So in this example, let's say it's dripping sell orders, right? So there are market sell orders coming in down here, right? You see all these market sell orders coming in down here? We've got 3 minutes till the news, guys. So let's get through this quick. So the sponge is the passive participants, right? I'll put an L for limit orders, right? And the faucet is M for market orders. So in this example, right, we can see when price came down here, you can see on the heat map, the orange and yellow, that's the sponge. Those are the limit buyers, right? So that sponge absorbed everyone that was selling. And then when aggressive buying came in, right, when this faucet shut off and this faucet was no longer dropping aggressive sell orders, it's now dropping aggressive buy orders. The market has a really easy time, rallying up from there, right? So that doesn't always happen because these sellers could potentially overtake this sponge as well, right? So if this sponge gets just totally saturated by all of these sellers, right? And everyone that was willing to limit buy here is filled, and there's still a surge of this faucet is starting to become a fire hydrant, right? Then we're going to saturate the sponge and break down, right? So reading the order flow like here is a real-time example of seeing the sponge absorb all these sellers, then aggressive buying comes in and we shoot off of it, right? Because everyone that was willing to sell aggressively got absorbed, and now aggressive buying is coming in and reversing that, right? So that's kind of a visual kind of relationship to understand between aggressive buyers and sellers and limit buyers and sellers. Make sense? So there's a big old bounce there coming into this 9:45 news in 1 minute. Look at that. Just a straight shot from the 50s to almost to 80s. Yeah, we broke the 80s. So 30-point rip basically straight off the open on ES. That's freaking wild. The volatility is there. Like, we've had price range movement up and down. I remember trading in times where ES traded up and down in a 10-point range all day. Right? We got 30-point movement in the first freaking 10 minutes. But it's just very undirectional, right? We'll have these surges of movement and then, kind of whipsaw back and forth in current conditions this year so far. Which, if you're accustomed to trading in like a trending direction, this can be kind of brutal to adapt to. But that kind of goes back to just understanding the conditions and understanding, which setups have the best expectancy in different market conditions. Yep, news is out. So we'll see what happens. PMI is lower than expected. Theoretically, that should be positive news. No, saying negative impact. Potentially negative impact on ES and NQ. Let's go back to this range. We're kind of just right around. So let me go back to this 4-hour chart that I showed you guys with the volume profile. The more we kind of stay in middle range conditions, the more I just like look at higher time frames and volume profiles and avoid doing impulsive things in the middle. But we did have these lows down here towards the low of the balance range, not at the total extreme, but extreme of these last couple days, right? And look at that. To me, the best setup on that was just looking for a mean reversion back towards this point of control from the last few days, right? From these prior lows there. Unfortunately, that just happened like right off the 9:30 bell, and so I'm not really gonna touch that. Now, not much that I want to enter on here. Just look at this range that I talked about, right in the middle of here. If we do get up towards the extremes up here where we made these lower highs up here, I might start to get more interested for another potential mean reversion. Should also mention, if we don't see that and we see a strong recovery up here, then that scenario could be in play. But that would be kind of going against momentum from the last few days, right? We've definitely seen pops failing and momentum moving downwards. But like I said, those aggressive buyers have been hammering the lows. So definitely chasing the extremes one way or the other is the best way to get stopped out the last few days. Damien, no, that's not something that I do as well. Just over time. I'm not saying I've not done it and I wouldn't ever do it if just everything lined up. He asked a good question. He said, you don't enter trades minutes after the market open, but if you have a directional bias for the day, wouldn't you want to enter a trade before the market opens and move with the direction of your bias? Yes, but generally I don't have such a firm directional bias. Like, it depends. That's a good question. Let me think about it. Generally speaking, I don't like getting in trades in the pre-market. Just more often than not, I regret it. And I'm at least in terms of my intraday scalping trading with futures, not so much my swing trading, but my scalping trading. I look to be in and out pretty quick of opportunities. And yes, that might be beneficial sometimes if you see a good entry in the pre-market to go ahead and get in. But just more often than not, I've over the years, I feel like I've tended to regret doing that, and I just pretty much don't at all. No. So if I don't get a entry and confirmations and location at the time windows that I know are high probability, high expectancy, at the locations that I know are good, with the confirmations that I know are good, I just don't do it. And if it just looks like a shiny object and I'm like, oh, just this one time, yeah, just this one time will kill your trading. So if it's not something that you do repeatedly and often, you're better off just not doing it at all. Because more often than not, you think something's going to happen and you're like, oh, just this one time, let me, get in before the open. Let me get in, here because I think this is going to happen today. That's not something that you can reliably, consistently repeat with a positive expectancy. Yeah, I do trade swing trades on the S&P and the NASDAQ. Generally, I would say 2 to 4 day swings, like when there's higher time frame opportunities, essentially, where I see the potential for a large move to occur based on higher time frame analysis, based on order flow analysis at those higher time frame levels and stuff. A lot of times what I'll do is I'll enter trades like that as a scalp and hold part of the position for a swing. Feel like the majority of the time this month we've had decent moves like this, and then we have just hours of watching paint dry in a non-key area. So I feel like this month has been the month of testing your patience for sure. So zero trades for you, robot. Good night. So here's some interesting orders. See how that triggered the absorption indicator up there as well. Not necessarily at like a key location or anything, but you can see how this surge of buy orders came in, and look at how these passive sellers stepped in to meet them. That was interesting. That is something interesting to pay attention to on the order flow. However, I'm just pointing your attention to it for, education purposes, really. We're ultimately very much in the middle of the range here. So despite seeing a confirmation like that, it's still kind of a coin flip in terms of location. But that is something that, if it aligned with a trade setup at a key location, that's something I would pay attention to. Seeing this surge in buy orders get, met here, one way or the other, right? One way or the other. And it's also occurring. Look at this. This is that same box that I've drawn, these lines here on Bookmap. This is the same location. I've been seeing interesting orders like this occur the last few days. And that's why it's still on my Bookmap here in this zone. I continue to see interesting things. And that's also, now that I'm looking at this 4-hour chart, 80 is like right at the point of control of this volume profile that I drew of this entire balance range for the last few days. So it's just around that, which is also interesting. Your chart looks like a balloon party. What is this? Oh, that's funny, dude. This is Bookmap. I'm an order flow trader, tape reader. So I analyze the market based on supply and demand, based on looking at, structure from charts, on, candle charts, especially with volume profiles and stuff, to analyze where people are in the market. And then this is not an indicator. This is a tool called Bookmap, and it's showing me the real-time aggressive buy and sell orders as they come in the market. So the green bubbles are showing me the delta of aggressive buy orders, and the red bubbles are showing me the delta of aggressive sell orders as they come in the market. I can zoom in and out here, so it's not a specific time range, it's real time, right? So the more I zoom out, the more it's going to group orders together, and the more I zoom in, you can see I can kind of see the orders as they come in by the second, right? And on the heat map here, it's showing me where passive, this heat map above current price is going to be passive sellers, and this heat map below price is going to be passive buyers. So that's the same information that you would see like on a DOM on level 2. And this is basically the level 2 and the time and sales visualized. So if you look at like a chart if you trade like options and you trade stocks and you look at like time and sales to kind of view the speed of the tape on time and sales, and the level 2 to see, where there's larger blocks of passive orders, right? This is the same thing. It's just visualized on a heat map and a bubble chart. It's a lot easier to read than, just a time and sales going bzzz. And then down here, I have volume bars split by buying and selling. So you can see the important thing here, guys, is understanding the market auction, right? So a very important concept is the concept of effort versus reward. And if you understand the market auction from books like Studies in Tape Reading and stuff, you understand kind of this balance between effort versus reward. So if we come up to a key area and there is significant effort, like significant aggressive buying, yet price does not move any higher, what does that tell you? If there's significant unrewarded effort over a period of time, there's likely a greater force of passive sellers in that area. And if and when we break down from there, it's likely to fuel a strong reversal one way or the other. On the other hand, when we see significant effort, right, significant delta from buyers or sellers in a direction, and it is rewarded by price movement, that is indicating a strong trending direction, right? So we get a very good feel for the strength and probability of a move, seeing the delta between aggressive and buyers, seeing how much price is rewarded in terms of price movement based on the size of orders as it comes in, that we cannot see from just looking at a candle chart alone. So when I combine that with the strategy of like looking at supply and demand on candle charts, looking at volume profiles, and then I have the edge of seeing things develop in real time significantly before anyone else is aware of it that's looking at a candle chart, because I can see it in real time, that effort versus reward equation in real time visualized by the speed of and size of orders. That's a huge edge. What's not a huge edge is over analyzing stuff like this at non-key areas in the market, and that can really hurt you. Or, thinking you see just a large order one time at a place, right? Thinking that's absorption and we're going to reverse from there. Not necessarily, right? And this is a perfect example of that. Look at all this. Look at all these market buyers, right? So we saw this interesting activity here where sellers were meeting them. However, on these pullbacks, we never really saw any size and aggression from sellers, right? Look how small this selling is relative to the aggressive buying that came into these highs, right? And so right here, we can see aggressive buying continuing to pressure this level that was resisting, right? Remember the sponge analogy? And, that sponge became saturated. These passive sellers became saturated, and this aggressive buying was still applying pressure to the point that now these aggressive buyers are now being rewarded by price movement. So that's the edge, is understanding effort versus reward, right? And a lot of that comes from experience of reading the size and speed of orders on the tape. So a couple little things that I think are helpful when you're getting started reading the order flow. There's some indicators on here on Bookmap specifically, and other tools can show you this. I think Deep Charts also has some really good stuff. Whoa, look at that. So now, wow, holy, what the, some news had to have just come out. What the heck? But look at this. So this is, holy, what just happened? Trump asked if he's considering a limited strike on Iran. And he said, I guess I can say I am considering that. That was 15 minutes ago, though. What in the world? Look out. Right. So there's no way that I could have predicted that was going to happen, right? However, we saw it building up before it happened, right? Like I was just tariff decisions. Oh, okay. So we did finally get an actual tariff decision thing. So we could see this building up before this move happened. So somebody knew, and somebody was placing orders, because I was just explaining to you guys how we were seeing this exhaustion from buyers here and these aggressive buyers into these highs. We could see that before this move happened, but obviously I had no idea this news was going to come out and this move was going to happen, but we could see it building before it happened. Now we're coming into that higher time frame area from the top of this balance range from the last few days. The extreme of that being this area up here around like 25 to 30, which I have marked on my chart. Let me show you guys. Which there's no way, you know, under different circumstances I might have traded it, but you can see that area. And this was the last like low volume area here above these highs as well from that sell off yesterday, right? So that's why I was watching that spot. But obviously with how crazy that was, there's very little chance that I was going to short that right there. But it remains a key area here. Goodness. So that news, oh, that news just accelerated a big old nasty fake out and mean reversion here. So that's a little unfortunate. What a day. So look at this. Just looking at chart here, we had the test of the extreme off the 9:30 bell, and then the test of this extreme off that 10 a.m. news. And both of them so far, you know, this could change, right? We could now hold here and break out. I don't know, but both of them so far have mean reverted, like I talked about this morning, back towards this area here. Unfortunately, did not catch that right off the 9:30 bell and did not fade that right off that news. So just a wild day. But hey, I hope you guys learned something. Learn something about reading the order flow and seeing a move before it happens. This, even when what you expect to see happens, these markets still find a way to surprise you. Look at that. Big old nasty mean reversion. That was gnarly, but not kind of similar to, you know, entering that trade off the 9:30 bell. I was not prepared to fade that kind of a crazy rally up here into that area, although it worked. Right? Although it worked, I was not prepared to fade that. Mentally, I was not mentally prepared to fade that. Look at this, guys. This is the same thing that I've been talking about this morning. Look at the bodies of these candles here. We're just right freaking there around that point of control there. Both extremes. Right? Here's that volume distribution. Both extremes. There where that got tested, and these lows, right? Towards the lows of that. But both times we saw that the strength from buyers here before that news that kind of broke through that point of control and shot up there. Again, just because I see it building in something doesn't necessarily mean I have, you know, a repeatable trade setup that I look for on it. And that makes sense with the conditions. This is an interesting spot though here on this pullback to see what happens if we break back under this now. Right here where these large aggressive buyers were before that news came out, right? Somebody here knew, right? They preempted that move for sure. There's no way. There's no freaking way. Price always precedes news, right? So we'll see if these aggressive buyers defend this now. That'd be interesting. I do like how these buyers are defending this, but I was a little tardy and I did not pull the trigger on anything. If I do see another pullback here, this is kind of interesting now to me. If buyers hold where this activity started, that could be potentially interesting just to scalp it to the long back up towards the top of this range. And look at the passive buyers stepping in here. They stepped in here. I'm not going to chase it up here though. If I was a little more at the ready, I may have caught it here. So this is what I like. See that aggressive selling that came back into this zone where that buying started that rally, right? Those insider traders that knew something down there. Look at that. It got defended and then aggressive buying coming in again. So this is something I would have liked to long here now, but I did not catch it. We'll see if we get a pullback. If we get a pullback that defends, right? Really defends this whole area from like 80s to 88s. If we get a kind of an impulsive pullback that defends strongly there, we're trading above VWAP, above the 20 EMA, then you know we could see an interesting breakout to the upside now. But isn't that interesting? Look at where that bounce occurred, like exactly above where we saw this occur before that news came out. Right before that news came out, we saw this already occurring and then blast off. Retested right there, right at VWAP too. Dang. That I liked. I should have caught that. That's okay. That's right. Strike on Iran this week? I didn't see that. All right, guys, where are we at on the likes? U.S. military planning on Iran, highly advanced with options. Yeah, that's not really new news. We've already known that, at least me. That's been being reported on OSINT pages for days and weeks. All right, guys, let's start running the giveaways shortly, but we got to break well over 100 on the likes, guys. Unless my thing's delayed, I'm seeing 87. Come on, guys. We got to get that. Those are rookie numbers. We got to get that up. Got to get that up. Still consolidating here. Yeah, let's get that up, guys. Let's break 100 likes and let's run some giveaways. Pull back holding here right around the 6,900 area. Let's check out NQ. Man, my computer's lagging. Sorry, guys. Got too much going on. There we go. All right, guys. So the like has been smashed. So for those of you joining in on X and TikTok, first of all, thanks for tuning in. Second of all, make sure you come over to the YouTube live stream for the giveaways. You'll have to enter on the YouTube chat. So make sure you check the link, come over and hop on the YouTube live stream in the chat. If you want to jump in to be a part of the giveaways, I'm going to give the keyword here in just a minute. Let's give them just a minute. For those of you joining in on X and TikTok, hop over on the YouTube live stream if you'd like to be entered in the giveaways. We've got Alpha Capital accounts, Apex Capital account, Apex Trader Funding account, and a TradeZella 3-month account subscription. So if you're tuning in from X or TikTok, make sure you jump over here onto the YouTube stream so you can join in on the giveaways. We're coming back towards that key area again. I don't know why my computer is lagging like heck. So trading with Jose, I'm gonna tell you guys the keyword here, and then you can enter it in the chat one time and one time only. If you enter it multiple times, you will not be entered in the giveaway. And then I will run it live on stream. I'll spin the thing and we'll select 3 different winners here today for the different giveaways that we have. Okay. So in the chat, one time and one time only, enter !tape reader. exclamation point tape reader, one time and one time only in the chat if you'd like to be entered for the giveaways. We'll give it just a minute here and then we'll pull that together and I'll run the giveaways for you guys. Look at this aggressive selling coming back into these lows, into this key spot here. Some size and aggression from sellers coming back into this zone here. Now some aggressive buying coming out of here. All right, we're gonna run it in just a moment, you guys. We're gonna run it in just a moment. All right, guys, we're gonna close it now. The entries are now closed. So we can pull the names together and run the giveaways. Got another bounce off this area again. I still didn't catch it. I'm still watching it. What I generally like to see is a sign of these aggressive buyers and then some kind of a little pullback into it to long. In this instance, it would have been better to just go with these aggressive buyers as soon as it started coming in. But that just happens sometimes. All right, guys, I'm pulling the list together. The entries for the giveaways are now closed. So let me get the list here from the team. One sec. Got it. All right. Here we go, guys. Man, look at that aggressive buying coming in again. No pullbacks allowed, man. We come back into that zone, did not get the entry signal that I looked for, and just shot out of there. Samir, U9G3U, congratulations. Let me know in the chat if you're here for the giveaway. Samir, U9G3U. There he is. Congratulations, Samir. Make sure you follow the instructions that the team will send there. You've won the 300K Apex Trader Funding Challenge. So you'll have to claim that in the Chart Fanatics Discord. So head over to the Chart Fanatics Discord if you're not already in there, and head over to the giveaways tab to go ahead and claim that. Congratulations, man. Awesome. All right, let's send it. Ron's 8686. Congratulations. Let me know in the chat if you're here. There he is, Ron's 8686. Congratulations. So you've got the Alpha Capital Group Challenge. Head over to the Chart Fanatics Discord, to the giveaways channel to follow the instructions to claim that. Awesome. We've got one more here, guys. Karen Bard. Can't pronounce that. S2U. Karen, S2U. Let me know in the chat if you're here. Congratulations. There you go. Congratulations. There you go. TradeZella subscription, 3-month. Head over to the Chart Fanatics Discord giveaways channel. Follow the instructions there to claim that. And congratulations. So we're seeing a continued significant amount of aggressive buying up here at the top of this balance range that we've been in for the last couple days. So I'm beginning to watch for this breakout here to hold a pullback to go for it to the long side. If we can get kind of above these 6,900s, 6,915s and kind of hold a pullback, buyers have just been nonstop putting on the pressure today. Aggressive buying has just been nonstop on the gas pedal today. Since that 9:30 open in the first minute, buyers have just been on the gas. But we're at the top of this multi-day balance range here. So this is kind of a critical test now to see if we get strength above here. Not just that crazy wick off the news rally, but a true break, ideally hold a retest above 6,900, 6,915 area and go for a breakout of those 6,930s, probably looking towards 6,960s to 70s maybe, if we can get up there. Do I have an ATM machine 1, 2, 3 punch for top reversals the same way you do for bottom reversals? And are there different confluences that you tend to look for to give you confidence for those specific trades? Yeah, there's a lot of similar stuff that I look for top reversals, but there are some nuances to just kind of the behavior of bear markets and behavior kind of that I see on the order flow on top reversals. It's a lot of the same similar stuff applied in reverse, but you just have to get the experience to know for yourself. For the people that I kind of like mentor with trading, I've gone over in great detail. And I will over time here, especially as we have a top reversal setup that I can give you guys a real-time example of. Taking a look, VX fell through the floor, but it's still wicking back up over 20. It's been persistently trying to hold over 20. Persistently trying to hold over 19.5 to 20. Look at this. So ideally for like strong upside, I would really like to see us get under and hold under here. Looking at VX, you can see just how persistent, you know, we got that little drop here this morning, but we're still holding over 20, and especially this 19.5 area. You can see we've continued to hold bottoms above there. 1, 2, 3, come down there. Some aggressive selling coming in the highs up here. So we've had a lot of aggressive buying up here, but we're still ultimately just kind of flirting at the top of this balance range that we've been in. Just kind of flirting with it. Not strong momentum really outside of it that's holding outside of it yet. Did you enter the buy for NAS 100 before? No, not sure what that is. I don't trade. I did not. All right, more aggressive buying coming in. This was right at that 69.05 area, which is kind of just over those prior highs. Also kind of persistently holding two dips in the after 10 a.m. here above 20 EMA. Yeah, if you haven't already, if you guys appreciate this kind of live analysis, live education, really that's the focus here, for me at least, is the live education for you guys. It helps us out a ton if you smash the like and subscribe if you want to see more. We've got really good traders live here every day on Chart Fanatics Live. So subscribe, turn on notifications if you want to be notified. And also, make sure you check out that link for the Chart Academy coming as well. You're welcome. I appreciate you guys joining in here, right? This is, I enjoy doing this. I enjoy helping people learn. It's more enjoyable than just trading by myself. So I appreciate all of you being here, being a part of the channel here. All right, so here's a pullback into 6,900, kind of a test for these buyers here now. Kind of a test for these buyers. Wow. That was an interesting break under there with a lot of aggressive selling. Let's see if buyers recapture that or if this breaks back down under 6,900 now. Look at all of that aggressive selling. Buyers are trying to recapture that. That'll be very interesting if buyers recapture this. I liked that. Took that long at 99. Gonna have a stop just under that. About 2 points under 97. Want to see this rally back up into these highs here. Very easily could just get wicked out here for a couple points. Yeah, just got wicked out. I'm out. I liked that kind of impulsive drop there where buyers held it and then started to recapture with aggressive selling. So I took it there, but more aggressive selling has now broken that. So no longer interested in that. We'll see if something new develops here. Kind of critical now, I think, for buyers to hold this 6,900 and get back over 6,905. I was kind of preempting it a little bit there, but risk was tiny. Still like how buyers are trying to recapture this, despite that kind of aggressive selling that came in here. Not really holding anything though. Kind of seeing some aggressive buying pop and then just kind of get whipped right back down. What I'm looking to see is if buyers kind of aggressively defend now that we've kind of gotten up here kind of 3 times at the top of this range. I'm kind of preempting it a little bit, but I wanted to see strong buying kind of hold now the 6,900, 6,905 area to go for kind of a break of these highs. But it looks like it's just kind of whipping back now, not really holding, which is not surprising. We'll see. We're still above this key area over here, but ultimately kind of, again, kind of failed at this high of this range. I like how buyers were applying pressure here. It was worth a tiny little risk, but not holding yet. In fact, it was still probably better to stick with the mean reversion idea here, as we've kind of failed under 69 10s and 15s. That's right. We are kind of holding this area though, like once, twice. Also holding these highs though, just kind of a whipsaw here at the highs of this range. I don't like how we didn't really hold that cleanly there around 6,900. What I liked was how this aggressive selling was coming in, but not really getting substantial movement under 6,900, and buyers were trying to recover it. So once I saw that aggressive buying recovering it, it was worth, 2-point risk here to go for, another 10, 15 point break of these highs. However, just kind of looking still too heavy now since then, just whipping back in. So no longer looking very good. So I'll continue to sit back and wait, see if something else develops. Today's fun. Definitely an interesting day. Continuing to see a lot of like whippy action. Actually, thinking back, what I just was trying there was almost an identical scalp to the one that I took a little 5R scalp on last Friday, I think. Almost identical. Sometimes they work, sometimes they don't. So SPY is kind of back above a key area that I was watching around 685. Kind of trying to hold a pullback there around 685. I just like how buyers have continued to apply significant pressure on every dip. So I'm a little preemptive here because we haven't really broken out of the top of this balance range yet, but I'm kind of looking for it because can kind of get into it here if that's building with very, very little risk. I like that aggressive buying there. More aggressive buying there at the 97s. Very important to see if we can recover here. Although I don't love how the buying is kind of dwindling here at the highs. I would really like to see some larger aggressive delta from buyers pumping into these highs here. But I do like how we're recovering back up here after seeing these drops fail multiple times. There we go. I like the recovery above the 20 EMA there as well. We kind of double bottomed under it with some negative delta here and here, and now recaptured back above it with some aggressive buying. I think this could apply pressure back up into the highs here, back above 6,900. It could mean revert and bounce hard. It could. It seems like bulls are sustaining momentum on the day. VX is kind of sustaining momentum to the downside. That's why I'm a little bit preempting this with longs here. But I like how we're kind of holding higher lows. Holding higher lows. It's just a little bit difficult here in this whipsaw-y action, right? I do like how it's still holding though. It did take it. So Rumo said he's short NQ. That's not good. Not good for me. If I'm sitting here watching this, I'm in long on ES here. I'm just looking for a break of these highs again. I probably will not try this idea again though. If this wicks back, I'm going to stop this trade again at 97, break even. Yep. That just ticked me out, 97.75. So I'm taking a break even there. It's too whippy. It's not really gaining the momentum that I was wanting to see on the recapture of 6,900. It's kind of fizzling out. So I'm not going to hold a loss there again. All right. I think that's gonna stop that idea. Took a 2-point loss and a break-even loss, right? Still a loss because I'm paying fees and commissions there. But what I liked here is just how, let me get my drawing tool. And again, I know this isn't the best quality yet because we haven't really like broken the top of this range yet. And maybe I should have just got it here at the lows and kind of just held it with wider wrist. But what I like here is how we're holding these and still applying pressure to these highs, applying pressure to these highs, applying pressure to these highs, right? So I'm being a bit speculative that we're going to go break these 69.15, 69.30s, the top of this balance range here, right? Because it hasn't really happened yet, but similar to what happened before the news there, I'm kind of seeing that pressure building at these highs from these buyers, right? But it's still not high probability yet, and that's why I've kind of eaten a couple small, or a small L and a break even on it here, because I'm trying to catch it here as this pressure is building before we actually truly break out, right? So a little bit B quality, but I'm doing it with B quality because, or I'm trying to do it with B quality here because the risk versus reward, if it works out, is just astronomically high. Versus if I do wait and we do break it here, confirmation will be better, but risk versus reward will be lower. That's just a balance that I'm playing here. But if this fails up here, again, we could absolutely mean revert, you know, all the way back down to the 68.80s, 68.70s. Yeah, I liked it, but the volume is definitely slowing down. And generally, we're kind of at the last little bit of time window where I would like to see this play out. Generally speaking, once I see these breakouts start occurring after like 10:45, 11, they many times fail. This thing might have stopped me twice and now it's going to go without me. Yep, there's the highs. Oh, man. So I took a 2-point L and a break even trying to catch that, and then there's the target. Honestly, if I just kind of got it here with this that I was seeing and just kind of held the stop below one of these extremes that formed here, that likely would have been a better play and holding for this breakout. Am I frustrated? It's annoying to take a small L and then see your target get hit. That is annoying. But that is just what happens sometimes. Many times, I also take 5 to 10 R scalps in minutes on that type of situation. Unfortunately, my execution timing was just a little off there. However, the analysis was good. The analysis was good, and we're seeing exactly what I thought we would see, which is continue to pressure from these aggressive buyers into these highs. Mistimed and executed my attempt on it there. So I'm still watching for pullbacks here. I still like the aggressive buying into these highs. It's looking, especially with the weakness of VX, you know, back down towards 20. Continuous nonstop pressure from these aggressive buyers today, right? So I like that momentum that is aiding the probability that we kind of squeeze out of the top of this balance range here. You absolutely could short the highs too, right? Absolutely could see a failed break of these highs and see it mean revert again. Absolutely. But I just like how we're kind of building momentum to the upside across the board here. We're applying a lot of pressure from aggressive buyers to these highs. SPY, QQQ are up. VX is very weak. If we were coming into these highs and, you know, VX was still holding this uptrend, that would be a bit different. But it's, you know, VX is kind of smashing down, taking pressure off. IGV, the software index, is up. QQQ and SPY are up. So there's definitely a lot of pressure from bulls, but I would say the time window for them to have high probability of breaking out of this is declining. If they don't capitalize with all this momentum here, kind of getting later in the morning, then it could turn into a failed breakout and mean revert in the afternoon. Could. But for me, I was just trying to capitalize on the momentum and just use these highs as a target here. So that way I basically would have a high risk reward opportunity targeting these highs with that momentum, and not necessarily, because I don't want to long the highs necessarily, right? Because it could mean revert back down. But seeing the momentum building, holding higher lows, we got passive buyers defending, aggressive buyers coming into the highs. So I like that kind of momentum play, preempting a little bit the break of the highs and using the break of the highs as a scale out point, a target. Which, and especially, like I said, kind of holding above the 20 EMA, holding above VWAP, pretty much all the momentum is to the upside right here. So that's why I liked that scalp into the highs. And essentially it worked and I just mistimed it. So that's annoying, but it's all good. Do you use the daily point of control as a support? Not necessarily. I don't use it as support. I kind of look at where the value area is for kind of context more than anything. I look at the value area, highs, lows, and point of control, especially over a multi-day period, more for context, right? Man, there it goes. There it goes. Great trade idea. Mis-executed it on my end. Mistimed it slightly. But there it is. Target into these highs with all this aggressive buying. Really nice. I was a little early. Just a hair early. It's okay. It is what it is. More opportunities to come. It's all right. Annoying, but it is what it is. Yeah, sometimes you mistime it, and that's just how it goes sometimes. All right, guys, that's probably going to be a wrap for me. I will be back here on Chart Fanatics Live next Friday. Oh, Damien, you caught that? You're still riding it? Heck yeah, man. Nice. Very nice. Solid win. For me, the break of these highs, like on this type of scalp, right, where I'm seeing the momentum building into the highs here, with the aggressive buying, passive buyers defending, I'm looking to use the break of the highs as a target on that type of scalp. But yeah, thank you guys for tuning in. I got to go pack up and head out for a little getaway weekend. But appreciate you all tuning in here. I hope you learned something valuable, at least, in how to analyze the order flow, how to put together a trading plan and trade setups. That's the goal here. So appreciate you guys' time. Make sure you check out the link to join Chart Academy. Like they mentioned here in the chat, that's going to be a huge, huge win for the community. But I will see you guys back next week. And thanks, guys, for tuning in. Peace.